a touch of a 61% line like this on the VIX, many of these don't trade more than once. They'll trade one time and they'll defend and they'll lift off. And it's actually surprising how absolutely technical it has been this week. But it's important to understand where this fails. We have a environment here where we have a double bottom at the VIX's line in the sand, then we have a double top at the VIX's resistance level, and then now we're into the third touch of the long setup from our lows of the week to highs of the week. The ES went through the equivalent of this 61.8% line that the VIX has defended up until this point. And I'm so cautious. I guess the one thing that I'm very cautious of, the one thing that just jumps to the front of my mind is that what happens if we did dip a tick in to this 61.8% line on the VIX? We're essentially running into the original daily long. And I'm just kind of being aware of the possibility for this. It's just a fake out, just a gigantic fake out, and not wanting to get tricked by that type of environment. The other thing that is a little bit, I guess, counter to the VIX strength and indice weakness trade that's going on is look at what the dollar is doing. It's perfectly defending a 50% retracement short from highs to lows. And then inversely, what is the euro doing? It's just very politely running into its very first long setup after the trend break down here at these 1420s. What would that suggest? In US dollar terms, those negative correlations, especially the ES and the NASDAQ, would have a tailwind. What else is going counter to the bearish case here for the indices, that bullish case for the VIX? Look at what the crude oil chart is doing. It's very politely defending a short setup, leading us down into support. And as we were going into the close yesterday, knowing that there was this room for dollar weakness and crude weakness, we were expecting a squeeze up into these levels. And then the market running from those VIX support, indice resistance levels, filling the gap and leading into a continuation of the trend. But are we back at the VIX support? Yes. Are we at any dollar resistance? No. Is the crude oil at any inside of any support? Not yet. It still has this room here. And so that leads to, again, a possibility that there could be this kind of shakeout. Notice this red line that you have up here, this 75.53. This is yesterday's gap fill. It is not filled. And so going along with that kind of theme of there being the possibility for this shakeout, this fake out from the perspective of the VIX, running up into this gap fill, filling it, even dipping into a previous overnight high, maybe even dipping into one tick into a 61.8% line of the VIX and running right into our daily long setup again. And this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.